Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon, we have Dana D'Auria, Co-CIO and Group President of Solutions at Envestnet, Bridget Costello, Wealth Advisor at Kayne Anderson Rudnick, and Haleh Moddasser, Managing Partner and Senior Wealth Management Advisor at Stearns Financial Group. We're here to discuss the tailored financial advice that's needed for the female demographic and the interest and educational divide when it comes to investments that align with their values. It is great to have all of you with us. Welcome to Trade Talks. And Dana, you and I have covered this a number of times in the past. Women have a very different approach to investing than men do and tend to exert more patience.
Yeah, no, that's definitely true, Jill. There's a lot of research actually around women investors, and it's almost to the point where, I used to talk with groups of women investors at events and say, hey, who do you think is the better set of investors, men or women? And, they typically, back in the day, they would sort of lean towards men with the expectation that, hey, men are more involved, they're just more interested. A lot of these women, their husbands were far more interested in, the individual stocks or whatever that they're owning. But now I think people pretty well know, if you ask that question now, women are like, I think it's women who are the better investors. And they're right. And of course, these are averages. This is research that, some of it is, it's maybe a year or so old, some of the more recent, but as we evolve, I think maybe that changes, especially the way trading takes place nowadays. But traditionally, historically, Jill, 100%, and women are better investors, quote unquote, because they trade less. So they have less of their money going off to unnecessary trading costs. They're not sort of actuating their ideas that they're getting from, wherever, that probably are just upsetting the apple cart on the discipline of the strategy. So.
Yeah. And Bridget, in a way that makes sense, because you point out that women are looking for holistic financial planning, not necessarily just focused on investment management.
That's true, Jill. I find in all of my engagements with female clients, putting together a comprehensive financial plan for them gives them a lot of peace of mind. And then they're less concerned about the volatility in the short term in the markets if they know that they've got this great long-term plan in place. And as we check in with that regularly, it gives them a lot of peace of mind, particularly when we are protecting on the downside for female clients. They are much more concerned about hanging in there better in tough markets than they are about beating any index on the upside. And so by putting together a plan that involves insurance and, a level of volatility that makes sense for them, they can accomplish their goals. And for women, we're caretakers and we care about our families and our children and our nieces and nephews and our parents. And so ensuring that they have really good financial plans in place to accomplish those goals gives them a lot of peace of mind and really keeps them, out of the day-to-day market movements. They're really kind of focused from a higher level than they are at the day-to-day volatility in the markets, especially, what we've been seeing this summer.
Yeah. And Haleh, what you're noticing aligns with that as well. They're looking for financial security, not necessarily generating alpha and trading around headlines. It's a longer term perspective.
Yeah, absolutely. And I agree with Bridget, the financial plan is the roadmap. So if you can show them that a disciplined asset allocation, earning, let's say, 7% a year through to the end of their life, enables them to not outlive their assets, they really aren't connecting what's going on with the elections, say, with what's going on in their portfolio. Whereas in this political environment and how divided the country is, I have a lot of male investors who are calling and trying to make tactical moves in their portfolios, but I don't have that with the women. And generally speaking, the women do on average earn about 1.2% a year more than their male counterparts as a result of just not trading frequently, just staying the course.
Yeah. Well, it kind of makes sense. It's so hard to discern what policy is actually going to be and how that impacts the macro environment and the markets overall. So, Haleh, what do the demographics look like when it comes to sustainable investing and women's preference?
Yeah, it's interesting you asked that because we recently conducted a study, the Women of Wealth study, that interviewed 500 boomer women. So that's age 55 to 75, 95% of whom were married, half Republican, half Democrat, and we found that they have 80% of the same values. So whether it's gender parity, climate, gun control, it didn't matter about political party. What mattered was that women want to make a difference with their assets. They care about the greater good, and they want to leave a legacy for their kids. They want to leave a better world. Sadly, only 30% of these women believe that either politicians or philanthropy can change social outcomes, but they believe 60 to 65% of them believe that corporations can. So the important thing here is that women really want to invest in alignment with their values, but in this demographic, which is where the majority of the wealth is today, about 80% of them don't know how to do it. So 80% are interested, 80% don't know how to do it. And their advisors aren't talking to them about it. ESG's gotten a lot of backlash. You know, there's impact investing, sustainable investing, all kinds of ways to do it, but they don't know how.
Yeah. And Dana, let's follow along with that, because there's some empirical evidence from the Cerulli surveys that have come out suggesting that, women do have more of an interest across a number of demographics when it comes to sustainable and values-based investing.
Yeah, I completely agree with Haleh. And I would say it's very interesting because values-based investing also, I think, tends to get conflated with ESG, and it gets conflated with I'm trying to, put my beliefs on, somebody else. And so I think a lot of advisors get very nervous even going to clients anymore to suggest that there are solutions out there that they can do this. And that's something we as an industry really need to solve, because to Haleh's point, a lot of these women are looking for solutions like this. They're looking for an opportunity set where they can reflect some of their values in their investments. And I would also add traditionally, so if you looked at kind of, the socially responsible investing of, call it 15, 20 years ago, whatever it is, there were a lot of studies that suggested that you have to give up return if you want to invest this way. And that made a lot of sense, because the existing socially responsible investing was very blunt force. Just take out all certain types of stocks. If you take out certain types of stocks, the goal is to raise the cost of capital. By the way, that's successful, right? So if you take out those stocks and those stocks return more, you successfully raised their cost of capital. But of course, it means if I don't have those in my portfolio, I underperform a little. So this is sort of expected outcome to the research. But a whole generation of advisors have this in their heads, that if they try to put any kind of values-based investing into that portfolio, they're going to underperform. And they also now have sort of this political maelstrom as a backdrop. So we're not getting there as an industry. And it's a shame, because of course, we have great solutions now that manage tracking error, manage a client's ability to be really personalized. And, an advisor kind of, if they can broach that with the client, probably has a much stronger relationship over time if they are in fact receptive to it.
Yeah. But Bridget, this could be a great teaching moment as well, where the industry can step up and provide that type of education to their clients, or just educating within the industry itself. It feels like we're at that inflection point. I mean, you could even think about sustainable investing in, the big tech stocks when you think about ethics and responsible AI. I mean, that could potentially be value-based as well. So I feel as if, how advisors and clients are being educated, that needs to evolve along with the trends too.
Yes, I totally agree with that. Everything, as we know, over the last 2 years, the whole world has seemed to change overnight with artificial intelligence. What's complicated about value-based investing is that my values are totally different than yours, as are Dana's and Haleh's. So it's very difficult to come up with one great solution for all clients. What we've been able to do is really come up with customized portfolios for all of our clients. And so we have a really in-depth conversation at the beginning of the relationship with them that obviously covers all of the very standard, income and risk conversations, but also, are there certain sectors that you don't want to be investing in? Do you want to stay away from tobacco? Do you want to stay away from firearms and things like that? And we're able to overlay that on the portfolios that we put in place for our clients and be able to generate for them, the returns that they feel good about, but also not giving financial compensation or investment into businesses that they're not willing to support. And that, in my experience, is I have that discussion a lot more with women than I do with men. Men tend to say, I don't really care so long as the performance is very good. And women, 95% of the time, will say, I'm willing to I totally understand. I'm willing to compromise my performance so long as I'm not financially supporting things that I think are detrimental to the planet, to my children. And the customization level that we have been able to provide to clients, I think gives women a lot of satisfaction about what they're doing with their money.
Yeah, but which is so interesting because again, at this time, this inflection point where the advisory business is starting to embrace technology much more, once you start to get better collection, with that data and get more structured look into it. And Haleh, I see you shaking your head in the background there. That's when you can start making those quantifiable decisions, right?
Because I think that has been the problem, is that there's a lot of self-reporting when it comes to ESG. There's not a lot of good data accumulation, therefore it's hard to regulate, it's hard to enforce. I think AI could be a game changer. It can scour everything everywhere, and you can feel more confident that if a company says it's doing something, it actually is doing that. And by the way, I would also add that there is not, ESG's become a bad word, as we all know. It's become highly politicized. There is not a fund manager or a portfolio manager out there who does not consider environmental, social, and governance factors as part of their fundamental analysis of any stock, because it's important. If you have an oil spill, if you have backlash and people boycott your product, that's going to impact shareholder value. So these are important criteria that we all have to consider, even though it's in a political maelstrom, as you said, Dana. It's not going away. And something like 99% of millennials surveyed say that they plan to invest in alignment with their values. So as my guests all agreed here, we, the industry, need to give them a way to do that in a way that they're confident in, that actually works, that's not scamming the investor. Right.
Which is so interesting. And Dana, I agree with all of your talking points wholeheartedly here, where perhaps, ESG was the baby thrown out with the bathwater here, right? Because it's subjective, right? To all of your points, there is no way to quantify it, standardize it, operationalize it yet at this point. And, perhaps you can leverage these newer technologies, as Haleh had said, because you don't want to just completely ignore some of the good that comes out of it as well. My personal, when I look at it, I think the G is very important, not only from an investor return perspective, because the data suggests that better governed companies tend to outperform, but just in governance in general, that's not something that we can completely eliminate.
No, I completely agree. And I would build on points from both Bridget and Haleh here to say, one, I think personalization is the key to get people both, from the standpoint of engagement with that investment. And again, I think that's stronger ties with the advisor. If you're an advisor looking for good engagement with your client, there's, you could do your quarterly, meeting and say, oh, this is how we did against the benchmark, blah, blah, how are your kids, sports, blah. Or you could say, yeah, here's the things that we did in the portfolio that align with your values. Here's something you could show your child, like, hey, something you did, all these problems they're reading about, and they look at it, their prior generation as just, like ignoring it. It's not the case, right? I think the point was made earlier that Haleh made that, there is a lot of effort or desire, at least, to be part of this. So imagine like getting a report that you can bring home and say, this is what I'm doing toward this. Powerful. So I think personalization, 100%. To your point on ESG, look, ESG it's kind of an alpha thesis, right? I think it's too early. We don't have the data yet to call it a factor, a beta, but we can call it an alpha, and we could say, look, this is a thesis, not just around what are my values, but to Haleh's point, yeah, do I have stranded assets? Am I keeping up with what the infrastructure needs are going to be in this country and the secular trends that we're seeing, right? So there's a whole element of ESG that's really, and ESG itself as a concept is more about, capitalizing on these needs and the information that's embedded in environmental, social, and governance. You made the point well, Jill, that governance is already attached to quality, which has that is a beta, really. That's got a long history in the literature to say that those types of companies will tend to outperform. So there's a lot there to unpack. I separate values from ESG. I think if you are doing it because you have a values-based reason, that's a consumption decision, and you can have better alignment again with your advisor, with your portfolio. And then separately, done in a certain way, done well, you might actually see better returns. That's an open question.
Yeah, I mean, it's so interesting how you can get to these, philosophical debates within this area. But I want to switch gears a moment and get back to the industry more holistically. Bridget, do you think the industry, or what is the industry doing for the next gen of advisors to get them excited about the business so that they can leverage all these new technologies, think about ways of building portfolios, find ways to you work with this massive wealth transfer that's going to the younger demographic that's taking place right now?
Yeah, it's a great question. For our team, there are 7 of us that work on my team. There are 4 of us under the age of 30, and we get them intimately involved with our clients from day one, even if they are, the client service associate just doing money movements and day-to-day servicing. We bring them in and they get to intimately know our clients, and they sit in on all the conversations that we're having. And then we challenge them and we work with them when we're putting together a proposal for prospective clients or making changes for existing clients. We want to hear their thoughts. They're younger, they're more in touch with that generation, and we want to hear what's important to them. And so, including everyone on the team, no matter what their kind of level or responsibilities are, in these in-depth conversations with our clients has been so helpful. I will have someone on my team who will notice that in one of our client accounts, there's a very highly appreciated stock that we potentially are going to sell that they could use for gifting, and proactively reach out to the client and say, I know regularly it's important to you to make gifts to this institution. Do you want us to transfer this share of stock and save you on the capital gains? So to have everyone involved, everyone knowing what's important to the client, and having almost an IPS for each client where everyone on the team is involved and knows what the goals are, we can really help people in all the ways that we say we're going to at the beginning of the relationship. And I think that's what sets us apart. And for female clients, they want more touch points. They're not just interested in having that quarterly review meeting. They want to talk to us throughout the year. And when we can find these really compelling reasons to do so that improve their financial situation, that's been powerful to the relationships.
Yeah. I wish I could high five you through the screen, because I will tell you, the sub 30 set, being a later Gen Xer, through networking events or speaking events, they are more curious, inquisitive, and articulate than I can remember being like that in my early 20s. And I find their insight so helpful, and how curious they are is really exciting for me. Haleh, do you share that same optimism when you think about the next gen of advisors?
I do. I feel like I can speak to my kids who are in that age group. They're so smart. They're so much
right?
more aware than I was at their age. And I don't know if it's because of social media or just mass 24/7 news, but I feel like they're just more in tune and deeper on issues than I was at the time. And I also just want to touch on how committed both millennials and women are when it comes to social issues. For example, we started a sustainable investment platform in 2020. So this was before Russia invaded Ukraine. And as soon as that happened and oil became scarce, or the risk of oil becoming scarce happened, I literally was expecting $100 million of defections out of our ESG portfolios. We had zero. That's how committed, but like they say that women are, less risk averse or more risk averse, and women aren't, women, when they believe in something, they stay the course, and they did. I mean, not one person has decided that, because oil is in favor now, I want to get out of my ESG portfolio. Not one. And so I think that speaks a lot to the way that women invest. It's not just chasing alpha, it's chasing not only their financial security, but their dreams.
Yeah. And Dana, to wrap up here, your perspective, outlook, anything anecdotal that you can share.
Yeah, I mean, look, we've had a great conversation. I think we've hit a lot of really key points. And, you know, I would just say on what Haleh just said, it's probably how you sold it too, right? I mean, that they recognized, you know, and they understood from the start what it was about, why they were in there, and, you know, that kind of discipline, you know, high level, because we're talking about women in investing in general. I would say I agree with the comment too that AI is going to come in. It's going to make a lot of changes. One of the things, and we didn't touch too, I don't think we touched on it actually, but women so far tend to live longer than men. And a lot of portfolios are created around, you know, maybe a lifespan, or created for a couple around a certain lifespan. So I think as AI comes in, some of these interesting differences, you know, how long a woman lives versus her, versus if she's married a husband, for example, is just one way. But I think we're going to see better and better ability to tailor portfolios, not just for women, but, you know, for women as well as men.
All right. Appreciate everyone's insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.